Good afternoon. My name is Mike Sinibaldi, and welcome to my 2013 forecast for the futures and commodities markets. Today, I'm revealing the markets that I believe that will make significant moves in 2013. As many of my long-term followers know, I use Elliott Wave Principle as a means of forecasting. The purpose of these forecasts described herein is to share with listeners my long-term analysis and opinions on the position of the markets discussed and explain how this information can alert us in advance when the most significant moves should take place in the stock market index or a commodity. First, let's quickly review some of the long-term charts I presented in 2012 and see how they turned out.
The first market that I want to talk about is copper. I posted this monthly chart in June of 2012 where I was expecting a cycle wave 3 decline that would break a technical pattern known as a head and shoulders. And fast forwarding to today, this is how the chart looks. You'll see that price action has been contained between two converging lines, which is normally your tip-off that some type of triangular formation is underway. At the monthly chart level, I'm anticipating price will push up, break out of this consolidation pattern to complete cycle wave 2 before falling. Dropping to the weekly chart level, we can see clearly the subdivisions of wave B, and we're now looking for a 5-wave advance to complete wave C of cycle wave 2. I expect some minor resistance at 387, but a final price objective at 416, where wave C of wave 2 equals wave A. This next chart of coffee was presented to readers on July 31st of 2012, whereas I had looked for an initial 5-wave decline from the top, of which wave 4 was complete, and I was looking for a final 5-wave decline to complete within the span of the previous third or fourth waves at 135. And here's the chart as of today. You'll note that price has significantly declined since I last showed you this chart. I'm continuing to look to the downside, again within the span of the previous third and fourth waves. My first target is 114.65, with further downside potential to 94.05, but one wave at a time. We'll have to see what develops. This chart of the Shanghai Composite was shown to readers in June 29th of 2012. Where I was working a possible flat correction, and my downside targets were 2028 or 1312. And here is the chart updated through today's price action. You'll note that the previous extreme low at 1949.46 appears to have ended a 5-wave sequence to complete wave B. And for 2013, this is one of the markets that I'm watching closely, as I believe it will experience a significant rally. A couple notes. My first expectation is for price to reach the span of the previous fourth wave at 24.5373. However, should I be correct, I'll also be looking for price to overlap the previous wave A parentheses at 26.5641. In doing so, that turns this into 3 waves, and therefore I can expect price to rally above the previous extreme of 34.78. So this has the potential to be a big winner throughout 2013. The next chart I want to draw your attention to is a chart that I presented readers with on December 30th of 2011 of First Solar. While this was not a 2012 call, the price action or the ensuing price action that I anticipated primarily would lie within the fiscal year 2012, and that's why I'm presenting you to the chart so you can see the outcome. Also, you'll note that we have a triangular formation in another corrective pattern. So from the grand super cycle wave 3 crest, we have a 5-wave decline, a sideways correction for wave B, and then we should see a 5-wave decline to complete the pattern. At the time that I presented this chart, the current price of First Solar was $34.25. Fast forward You'll note that I've made some degree of trend changes. However, the internals of the corrective structure from the grand supercycle top has now completed at $11.43. Moving forward, the price has rallied to $35.39, which is the 0.618 of the entire swing from 50.20 to 11.43. Now you might say, Mike, that 618's out of place. And visually it is, but mathematically it's not. I'm using log scale,
and I've compressed the price scale. From 1143 low, this advance, I believe, was in 5 waves. From there, price should fall in 3 waves to 2066, which is the 618 retracement of the entire move. That should be followed by another 5-wave advance. This chart of corn, ticker symbol CORN, an ETF, was presented to readers on September 28th of 2012. And in my analysis, price had just completed a long run-up that was followed what was a 4th wave that found support around the 46 area. My anticipation here was for a 5th and final wave rally to a major top, but that's not what happened. Fast forward to today, and although I'm presenting the same chart at the weekly chart level, you'll see that the previous low of 45.93, which I had labeled as Red Wave 4, gave way to a small rally, but then price fell off in an impulsive manner. That has forced me to revise my wave count and conclude that the Grand Supercycle top Wave 3 is now in place, and we should see this as a long-term top in this market. Near term, I'm looking for a conclusion of the first wave of Wave 3 circle down, but eventually price should work its way down to the previous 4th wave of one lesser degree at 25.23. This chart of soybeans that was presented to readers on August 6th of 2012 also confused me. From the 1690 top down to, I believe, 1536, I was unclear as whether that was a 3 or 5 wave structure at the time. However, I was most certain that the following advance to 1656 was in 3 waves, which therefore led me to believe that a decline through 1536 would be the eventual outcome. As you can see from the chart, I've highlighted the area that I was evaluating at the time. As I mentioned earlier, my analysis told me that price should drift lower than 1536. And after this 3-wave swing, when price failed to take out 1536 and subsequently rallied in what appeared to be 5 waves, 1, 2, 3, 4, 5, at that time I knew I was wrong. And finally, the last chart of my 2012 review of Google was presented to readers back in August of 2012. Unfortunately, this chart stumped me also. I was looking for a 3-wave advance that would stop short of this peak to complete cycle wave B. Fast forwarding to today, this is my present preferred count of Google. You'll note that we have a impulsive rise from cycle wave 4, in which the first 4 waves are complete, and I now think that we are working a 5th wave ending diagonal that will complete Grand Supercycle 3, which is again a major top. While the subdivisions of this last 5th wave are still under evaluation, meaning we may have completed wave 4 here, or possibly after this rise we're going to work ourselves down a little lower, and then a final 3-wave advance up is unclear. There is, however, another way to count the rise from the cycle wave 4 low. I could consider this is wave 1, wave 2, and this is my wave 3 peak, in which case I'm either still working wave 4 or I'm now in my final and 5th wave to new highs. The key takeaway here is whichever way you choose to label this subdivisions of the final cycle wave 5, This security is near completion, and the risk is to the downside. The next market that I think is poised for a rally is the Nikkei 225. Longer term, I believe this market is working a WXY correction, where we have W and X waves are complete, and we're now working the Y wave, which is typically a three-wave pattern. We have wave A down that should be followed by a three-wave advance. We have wave A, wave B, and should now be working wave C red. And I've put a couple of projections here on the chart. Wave C would equal wave A at 1183, and wave C would equal a 1.618 multiple of wave A at 1412. At the lower level, that's roughly a 100-point rally. However, at the upper level, that's significant. One of the biggest developments that I think investors and traders will see in 2013 will be a US dollar rally. I know this is a contrarian view, and everyone expects the Fed to print and punt into oblivion, but I'm going to show you clear evidence that a dollar rally is imminent. We'll be covering the Australian dollar, the Swiss franc, the Japanese yen, and the euro. Each, as you will see, lead to dollar weakness in the early parts of 2013, and then dollar strength. The timing of this is unclear. At the quarterly chart level, we see most recent price action has been contained within two converging trend lines, most likely some type of triangular formation. Dropping to the weekly price chart, we can see more clearly that the structure is a triangle. We have waves A, B, C, and we're either complete in wave D, or we may have one more push up before the decline in three waves to complete wave E, and then a significant rally should occur in the Aussie dollar that pushes price up to the 115 level. The second piece of evidence to support my conclusions is the euro dollar. At the quarterly chart level, you'll see that we're working a large triangle in which we have wave E advance unfolding to complete wave B triangle that should be followed by a precipitous decline. Dropping to the weekly chart level, I want to make one point. You'll see we've hit resistance at 133.65, but the key point or takeaway from evaluating this market is how price reacts to 134.88. The reason being, there would be some Elliotticians that would label this low as wave D and this swing high as wave E, and therefore this move down would be already in a decline, a five-wave decline in fact. And if that's the case, then this is a second wave, and as you know, according to Elliott rules and guidelines, a second wave can never retrace more than wave 1. So 134.88, or a breach of this level, would confirm my count and open the door to 137.97 or higher. Either way, the prognosis is euro strength, dollar weakness, followed by dollar strength. Next, the Japanese yen confirms my counts and my analysis that the dollar will rally. Now, if I had done this analysis and presentation late in 2012, most likely no one would believe me. However, I think the yen has gotten everyone's attention here recently. But let's go through the analysis. We see that after the yen broke out of a large triangular consolidation, it rallied in 5 waves to complete the structure. Thereafter, price appears to be falling impulsively and has now reached near support. This would be supportive of the idea of dollar weakness and then strength, as price rallies and then falls. Dropping to the weekly chart level, I want to call your attention to cycle wave 4 here, as this level will become very important in the years to come. From cycle wave 4, you'll see that the yen rallied in 5 waves and ending diagonal. As you know, ending diagonals are terminal patterns, and once complete, they should fall to where the pattern began, which is cycle wave 4. That area surrounds the 80 level. But what's most significant is the time that it takes to retrace that amount. And as a general guideline, we should see a retracement in half the time that it took to build the pattern. It took approximately 5 years to build the pattern, so in 2.5 years' time, we should see a complete retracement. That, my friends, is a significant or potentially significant decline in the yen and an advance in the US dollar. And our final piece of supporting evidence is a chart of the Swiss franc. Notice once again we have a 4th wave triangle and a 5-wave advance that culminated in a spike, and now prices are working its way down. At the weekly chart level, we can see that wave 1 parentheses, an impulsive wave, has finished, and we are now working a counter trend rally in 3 waves that should terminate at the level of agreement at 116.20 to 116.48. There again, this implies early dollar weakness and then a fall in this market, dollar strength. In conclusion, I presented 4 markets, all confirming dollar weakness, dollar strength thesis for 2013. Let's see what plays out. I had planned on including the U.S. equity markets in this 2013 forecast, but the broadcast is currently pushing 17 minutes and I'd rather come back and make a separate blog post or another video. In the interim, I'll leave you with the monthly chart of Dow Cash, and you note that price has been contained within 2 broadening trend lines. So I'll leave you to determine what wave count best illustrates this price action. Let's leave it there for now, and as always, best of trading. If you are not a subscriber, you can get real-time commentary by following us on Twitter at Elliott Wave Live or visit elliottwavelive.blogspot.com. As a reminder, subscribers should contact an investment advisor before acting on any information contained within this broadcast. The content contained in this broadcast is the general opinion and comments of the author. Neither purports nor intends to be specific trading or investment advice. It has been prepared without any particular person's investment objectives, financial situation, and particular needs. Information presented within this broadcast should not be considered as an offer or inducement to buy, sell, or trade any security or commodity. Subscribers understand that there is inherent risk of loss in trading and investing in commodities and stocks, and therefore you should carefully consider whether either may be suitable given your financial condition. Elliott Wave Live is not an investment advisory service nor broker-dealer. None of its contributors are licensed advisors, brokers, or CTAs.